But let me now welcome on board Vishwanath Mahendra, the ED and CFO at Niva Bupa Health Insurance Company, joining in on the show right now. Vishwanath, great to have you on the show today. Thank you so much for your time. You continue to guide for mid to high teens ROE in the longer term as well. Tell me, what are the key milestones that will sort of underpin this trajectory?
Yeah, good morning and thanks for inviting me to the show. So just to talk about ROE last year, and I'm talking more about IFRS, which is relevant for our business. Last year, we were around 7.4% ROE last financial year. The trajectory, for example, if I talk about H1, it is around 8%. We continue to guide that by FY29, it should be mid to high teens. This year, hopefully, should be in the vicinity of 10%, because second half is generally stronger for health insurance company, including us. And then the trajectory will be quite smooth from here on. In IFRS, it's a stable, steady ROE of 15% plus is what we are guiding.
Can you also take us through the kind of change that you've seen after September 22nd when the GST rates came into play?
Yeah, definitely. And it was really a game changer for the industry. In the sense, now health insurance is in same category of goods like we have exempt goods like life-saving drug. So people certainly are appreciating this. There was already a lot of awareness post-COVID. Now that awareness is turning into actual purchase. If I can just talk about retail health number for October, we have seen growth of 40% in the month of October, which was the first full month after this GST exemption. And that should be seen in the light of our H1 growth of 28%. So that's the kind of traction we are seeing.
Okay, and if you talk about your overall group mix, if you could give us a sense of where the SME business now stacks up in that overall mix, and what is the contribution from that segment?
Yeah, and SME is really big focus area for us. It is one segment in whole corporate group health which is profitable. So SME would be, let's say, currently small. It would be a quarter of or so of the total group health. But it's growing rapidly. In H1, the growth of SME business is around 30%. And as I told you, this is profitable. It's quasi-retail in that sense. We have lifetime value. SMEs do renew. And yeah.
Also take us through, when do you expect to turn profitable? Because last 2 quarters, your profit after tax you've been loss-making for the last 2 quarters.
Sure. I'll just clarify here in the sense we publish our accounts on 2 bases. One is IGAP. IGAP has some noise because there was accounting change mid of last financial year, where multi-year policies were mandated to be accounted on 1/n basis. So in that sense, what happened is under IGAP, we have claims, but earning is reduced to that extent. We also publish our accounts on IFRS basis. There we have been profitable, and we have in fact more than doubled our profit on IFRS basis from 60 crore to 132 crore in H1. So our recommendation is to look at IFRS numbers, which are more stable, and we do report audited financials and use them for consolidation into Bupa group accounts, which is on IFRS. And these are globally accepted standard.
And what about the combined ratio? Because that also has seen an improvement, right, on a sequential basis. Tell me what key factors were sort of driving this reduction, and do you believe this improvement trend can be sustained going forward?
Yeah, absolutely. So the combined ratio is one of the most important metric for any insurance company. So we have seen more than 100 basis point improvement in combined ratio for H1. It has moved from 104% last financial year H1 to 103%. And that is driven mainly on reduction in expense ratio. In fact, loss ratio has slightly inched up for us by 1 percentage point, but the reduction in expense ratio is 2 percentage point. That has brought down a combined ratio, and we see this trajectory to be continuing.
Okay, so that's the take on your expense ratio as well. And lastly, before we just let you go, with this GST removal on premiums now, are you seeing any positive impact, or are you penciling in any positive impact on elasticity, persistency, claims underwriting, any of those factors?
Sure. So first, expense ratio. Expense of management is a key metric where IRDA measures all insurance companies. We all need to get to 35% plus allowances for this financial year. For H1, that number comes to 35.8% for us, which is allowed. Our actual number is 36.3, which is 50 basis point higher. But if you see the trajectory, last year H1 it was 40%. So there is a 3.7 percentage point reduction. And we are very confident that we'll be able to meet this 35% plus allowances threshold for a whole financial year. So that's on expense of management. On this GST, you're absolutely right. We are seeing two, three trends. One is new business. New business, all those interests are converting into actual purchase of health insurance. There's a lot of traction in terms of search for health insurance. And I talked about numbers for the month of October. Second, on persistency also. 2 points here. One, persistency itself is improving. And second, people are going for higher sum insured because now the premium has reduced by 18%. So they can afford better coverage, higher sum insured, and there's a good opportunity around upsell and cross-sell.
Thank you very much.
Thank you. My pleasure.